And here's an example of one that we had set up. This was on Tesla. All right, so going through Tesla, just again, looking at the past data to kind of give an idea if it has consistent pattern, you can see Tesla has the implied move history for, it has the potential for big moves. Like here, implied expected move 8, the next one coming up is 8%, 9.3, some big potential moves. So then, combine that, well then what does it actually do? So here's going back, this is going back the October series. You can see Tesla closed up 26%. The series before that, the July earnings series, it closed down almost 11%. The April 2024, it closed up 16. In January 2024, it closed down almost 12%. The earnings season cycle before that, down almost 13 and 10. So you can see Tesla has huge potential move history for what it does. So that tells you, okay, well, what can we do with Tesla? Okay, let's do the long iron condor debit spread. So then you can even break it down more to really see it. So here's just going back 5 cycles, from that October 2024 to October 2023, you can see the implied move history. It tends to have an average of 8.36 up or down, but the actual, earnings, when it expired, you can see the average move up or down was over 15.5%. So you can see the last go around was up 26, down 10, 16, et cetera. So this tells us, what we can do if we do the right strategy. So set this trade up for, all I had to do was move 6% up or down, and based on that history, had a high probability of making a good profit. So this was going into the earnings release after the close on the 23rd. It was traded 246. Expiration 3 days later on the 26th. The expected move going in was for a move up or down over 9%. So set the trade up. All it had to do was move up or move down. Didn't care which way, but it moved 6%. So it's trading here. So set the trade up, and boom, it was trading down here at 219 at the end of the expiration series. So this one worked out perfect. And so here was the trade set up, looking for the big price spike based on that screen. So trade 246, and then set it up, expect to move there. So you can see when we took the trade off, it was up $160. This was the trade risk was 160. The potential profit then was 90. Okay, so this was doing a what we call that iron condor debit spread. So we're long call debit spread and put debit spread, 262.5, 265, 235, 232.5. And so these are the trades I'll be showing you and teaching you more in depth next week. But the key thing is the screening process, okay? Now here's the trade. So you can see where it went out. There was just, a big winner. So this thing was down 10.78%, and we set it up for, all it had to do was move down 6% or up 6% here or here, okay? So that was the trade, just 6% up, 6% down. We have a winning trade. So you can see here the call debit spread side was 75 bucks. That ended up, losing 75. But here you can see we had the put side. We had that part of the spread was 85 bucks, blew up to 250. So you can see where that profit came from there. So we had, we had on that we had $165 less the $75. So that was the profit of 90. That's a 56% return over that 3-day period. So that was a really cool trade there to take advantage of that.